Hello everyone. Today I would like to share you a story about Rohan. Just like many of us, Rohan loves sharing his life online. From that amazing vacation in Bali to the shiny new gadget he just bought, his social media is a vibrant highlight reel. What Rohan, and perhaps many of you didn't realize, is that this highlight reel just got an unexpected new audience. Guess who? The income tax department. Sounds like something out of a futuristic movie, right? But believe me, it's very real. Stick around because Rohan's story is about to reveal some crucial insights into India's new income tax laws and how your digital footprint is now under the taxman's watchful eye. For years, the income tax department primarily looked at bank statements, physical receipts, and formal documents. But the world changed. Our lives and our money moved online. And so the law had to evolve too. Enter the Income Tax Act with its new provisions. As of April 1st, 2026, or the relevant date of the latest amendment if different, the IT department has been given expanded legal muscle to look into what they call virtual digital spaces. What does that mean? Think of it as them getting a master key to your digital world. Your emails, your social media accounts like Facebook, Instagram, and Twitter, your online banking, even cloud storage, and those apps you use for financial transactions. All of it can now be legally accessed if there's a reason to believe you're evading taxes. It's not just about what's in your bank, but what you show the world. Do you know why this sudden shift? Well, the digital economy exploded. People started earning income in ways that traditional tax laws just couldn't keep up with. Think of the booming gig economy, online businesses, and especially the rise of social media influencers. The IT department realized that massive amounts of wealth were being accumulated and spent in the digital realm, often without a proper paper trail. They also got smarter, using AI and data analytics to sift through vast amounts of information from your ITRs, GST data, and other financial statements. This new law gives them the legal framework to connect those digital dots even more effectively. Now let's go back to our story of Rohan. He'd always been careful with his tax filings, or so he thought, but his social media told a different story. Posts about exotic holidays, luxury shopping sprees, and high-end gadgets created a vibrant picture of a lifestyle that seemed, well, a little richer than what he declared in his income tax return. This is where it gets real for the average taxpayer. If your online life showcases significant wealth or spending that doesn't quite match up with your declared income, it's like waving a red flag. The IT department isn't just looking for undeclared income from traditional sources. They're looking for discrepancies between your declared finances and your digital footprint. It's a call to be more transparent and meticulous with your financial records, ensuring they align with your online persona. But the spotlight shines brightest on our digital rock stars, the social media influencers and content creators. Their earnings often come in varied forms, and the new law has very specific rules for them. Remember that cool new smartphone or that sponsored trip Rohan's influencer friend Priya got for a promotion? Under Section 194R, if the value of these benefits or perquisites, even if it's not cash, exceeds Rs $20,000 in a year, the brand paying them has to deduct 10% TDS, tax deducted at source, on its fair market value. So those free goodies are no longer entirely free from a tax perspective, unless, of course, Priya returns the item to the brand after the promotion. Beyond freebies, their monetary earnings from sponsorships are also under the scanner. Payments above 30,000 rupees for professional services are subject to 10% TDS under Section 194J, 194C. And if their annual earnings cross 20 lakh rupees, they might even need to register for GST. Even income from cryptocurrency or NFTs received as payment is now taxed at a hefty 30% with very limited deductions. The message is clear: if you earn it digitally, declare it honestly. Now, before you go deleting your entire social media history, let's talk about your rights. The IT department can't just barge into your digital life arbitrarily. There must be reasonable grounds to believe that tax evasion is happening. Think of it as needing a proper warrant in the digital world. Any search or seizure operation needs approval from higher authorities, and recent laws even mandate audio-video recording of such operations for transparency. Plus, the Digital Personal Data Protection Act 2023 acts as another layer of protection, ensuring your personal data is handled responsibly. If you ever feel your privacy is violated without proper cause, you have the right to challenge it in court. The system has checks and balances, and the Central Board of Direct Taxes, CBDT, is expected to lay down clear procedures for this digital scrutiny. It's about legitimate investigation, not random snooping. Rohan, after learning all this, decided to get smart. He started keeping meticulous records of all his income, big or small, cash or kind. He began regularly checking his annual information statement, AIS, and Form 26AS, making sure every transaction reported by banks matched what he was declaring. His biggest takeaway? Transparency is key. Don't flaunt wealth online that you can't account for on your tax return. And when in doubt, consult a tax professional. They're like your financial navigators in this new digital tax landscape. Remember, filing your income tax returns on time is your best defense against unwanted scrutiny. It shows you're a responsible taxpayer. The new income tax laws are a sign of the times. As our lives become increasingly digital, so does the tax system. It's not about fear, but about awareness and responsibility. Your digital footprint is now a part of your financial identity. So, stay informed, stay compliant, and make sure your online story aligns with your financial reality. It's the smartest way to navigate this new era of digital tax scrutiny. If Rohan's story helped you understand this complex topic, please hit that like button, share this video with your friends, and subscribe for more insights. What are your thoughts on this new law? Let me know in the comments below.